So Square is a stock that really took off in 2017, going from around $14 back then all the way up to $100 per share in 2018. But in recent months, the stock has corrected and now sits at around $70, slightly under $70 per share, which implies around a 30% discount from all-time highs. Why is this, and is Square a good value at this point? Well, that's what I want to answer and discuss in this video with you guys today, and it's perfect because Square just released their earnings, so we're going to discuss some numbers, discuss some stats, and kind of figure out where this business is going and if it's worth an investment. So let's start off with the numbers here. You can see that they reported EPS of 11 cents versus 8 cents expected, and the revenue came in at $489 million versus $478 million expected. So the company had a nice beat on both EPS and revenue. So why was the stock down almost 8% after they reported this? Well, there were a couple of things that didn't really sit too well with investors. Gross payment volume, or GPV, which I'll refer to a lot in this video, came in at $22.6 billion versus $22.8 billion expected, so a miss there. Also, Q2 guidance was weaker than expected, coming in at 14 cents to 13 cents on EPS and $545 million to $555 million on revenue. So it's kind of a mixed earnings here. There were a couple good things, couple bad things, and it seems like based on the stock price movement that the bad things outweighed the good. So let's break this down a little further and take a closer look into these figures. Now you can see here that total revenue for the quarter was actually up 43% year over year. GPV was up 27% year over year, but down quarter over quarter. And net income came in at a $38 million loss, which was actually worse than the quarter one of last year with a $24 million loss. So now if you're looking at year over year comparison for growth, it was definitely there. It was definitely very strong. But the concern here for investors was that the losses increased year over year as well. And this kind of raises the question to investors of, will Square actually post good profits, good earnings without any fear of losses quarter over quarter or year over year? When a growth company posts losses, bigger losses year over year, it actually makes investors think twice about their investment. And a lot of investors, if they've gotten some good gains in the stock over the last couple of years or so, like in Square's case, they're going to take their profits and run. They're not going to keep holding it if they see a couple signs here and there they're not very comfortable with. Anyway, those are two things that stood out. Now, if we look at guidance for fiscal year 2019, Q2 is looking good, but I really want to focus on the 2019 guidance as a whole, as there were some changes here as well. They raised their revenue expectations and raised the year-over-year growth expectations, but their expected losses are also expected to rise. And this is because they've stated multiple times on the conference call that they continue investments in the Cash app, which we'll discuss in a few minutes here, and the seller ecosystem. Square prides itself on ease of use for their customers, and on the conference call, they shared a few stats with us. In terms of customers that are restaurants, 65% of sellers are self-onboarded, implying the platform is very user-friendly. Average GPV of restaurant customers is around $600,000, so quite some large restaurants here that are signed up with Square, not just some small mom and pop shops. In terms of retail customers, 85% self-onboarded themselves. An average GPV of retail customers is around $250,000, so it's much smaller than the restaurants, but still a decent size. 70% of online sellers use Square before expanding online, and once they do go online, they actually do see an increase in their sales, or vice versa. If they were just an online play and then they started using Square services offline, they see an increase there as well. And really what it comes down to is Square's goal for their customers here, which is to enable them to sell their product anywhere, whether that's online, whether that's at a retail store, or whether that's through a mobile app. But anyways, in summary of their earnings and guidance and all that stuff, in my opinion, they had a pretty strong quarter here. GPV was down quarter over quarter, but up year over year, like we said. And that's most likely because the last quarter was a holiday quarter, a lot more transactions going through, a lot of bigger ticket items. So it is kind of expected that Q1, the quarter following that, is typically lower in most industries. And as we also discussed, losses are expected to increase in 2019. Now, as a growth investor investing in a stock like Square, this is something you're going to accept. This is something you've come to terms with if you ever choose to put your money in a stock like this. Typically, personally, I like to focus on companies that are posting good profits, that are growing their profits year over year, and not really necessarily losing money. But there are some exceptions out there. Like you guys know, I absolutely love Tesla. I have a position in Tesla. So that's one of those companies where they are losing money, but I see the potential in the long term. Square fits in this category as well because I do see tons of potential for this company, and I'm going to go over the reasons why that is right now with you guys. Square has about $1.6 billion sitting in cash, so even if they do encounter losses quarter over quarter, year over year, my vision for this company over the next 5 to 10 years, yes, I believe this is going to be a longer play than my typical 3 to 5 year time span. But I do believe over the very long term here, Square will iron out these losses and post some incredible profits. So anyways, let's discuss what I'm excited about. Now, the first thing that I liked from the conference call that they talked about was Square's expansion in Japan, because Japan is actually a massive opportunity for this company in the next year or two. The Japanese government is really trying to make a change in their country for a cashless society and to get citizens and businesses to adopt cashless payment methods like what Square offers. Japan is one of the largest economies in the world, but a lot of consumers and businesses still transact through cash, and this is kind of where the opportunity for Square lies, because if they can convert these customers, they're going to get their products in a huge chunk of this massive economy. Also note that Japan is hosting the 2020 Olympics, and many international visitors will be using their credit cards when they visit Japan. So there's a lot of possible growth in next year with Square with this opportunity. And this is because of two main things that Square offers consumers: the Cash App and the Cash Card. So the Cash App is actually one of the most popular apps out there, consistently ranking in the top 20 in the App Store on iOS. The volumes from the Cash App grew 2.5 times year over year, which is absolutely incredible growth that will only get bigger as more people discover and adopt this app. Back in December, Square said that the monthly active users on the app was around 15 million, but they didn't release any new numbers this quarter. But what they did say was that the company actually spent much less money to acquire monthly active users versus traditional companies that are in the finance space. So it's a very lucrative segment of the business that they want to keep expanding on. And the way that the Cash App works is very simple. You use the app and you can pay for items, send and receive money, and store money on this app as well, directly in the app's balance. Now, to complement this is something else that's called a Cash Card. So this is a Visa debit card that you can use to pay for items from your Cash App balance. The unique part about this is that it isn't connected to your personal bank or debit credit card, so it's independent here. They also mentioned on the conference call that some cards are MasterCard branded, but I'm having a hard time finding more information on this here. But as a consumer, it doesn't really matter if you're a MasterCard or a Visa. In the end, those cards are accepted almost everywhere. Now, some interesting stats that they've shared with us was that 40% of these cardholders didn't have a business card prior to the Cash Card, and that these businesses were mixing their personal cards for business needs. Now, with this new Cash Card, they're seeing around 20% of a business's GPV being spent through this Square Cash Card, and Square is getting a significant portion of their volume flowing through the Cash Card because of this push that they've been expanding on the last few years. So I'm very optimistic on this segment of their business. Expanding Cash App and Cash Card will be a huge growth driver for businesses all over the world. And I think Square is in a very good position here to take full advantage of this because they have a very user-friendly app. They have a very user-friendly interface for the products that they offer, and they have a very high retention rate as well with their customers. So when a customer onboards with Square, in most cases self-onboards, they're happy with the platform and they stick with the platform. And this kind of brings me to my next big point about Square, which is another huge value point for this company, which many investors overlook when they look at Square, the business, and that is the payroll system that they offer called Square Payroll. This is a monthly recurring payment service that Square offers, which helps companies easily manage their payroll. This is usually a huge pain point for smaller businesses, and Square aims to make this seamless for them. Through this platform, you can do things like pay employees and contractors, offer health and other benefits, track employee hours, run payroll multiple times per month at no extra cost, and leave all payroll, tax filings, and withholdings to Square themselves. The goal here is to really give small businesses all the tools and features that large businesses have, but without all the headaches and high fees and processing that those businesses have to go through. I really think that this is more or less an untapped market for smaller businesses, which Square has huge potential to grow in. Every business requires this to some degree, and with Square's platform, their interface, and the absolute ease of use, businesses get a lot of features to make their lives and their employees' lives a lot easier. So guys, Square is doing some really great things out there for the business world. And analysts are still seeing this company as bullish, even though we had a correction and they had mixed earnings recently. Many analysts see Square in the high 80s range within the next 12 months, but if Square executes well and is able to prepare a good base for Japan 2020 Olympics, their share price can skyrocket past $100 in my opinion, and command a higher 4 PE, because by that point they would have proven out an expansion model that just works. If you're interested in learning more about Square, kind of where I go over the charts and stuff in a more technical view, make sure to check out 3 stocks I'm buying video for May. I did cover Square, it was one of the stocks in that video. But either way, guys, I hope you enjoyed this. Let me know if you're interested in purchasing Square yourself, if you're an investor in Square. Maybe you're waiting for it to correct some more. Let me know in the comment section down below what your thoughts are. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.